Welcome to today's SME Club event. Many of you who I've not met before, I'm Jen Quinn, Growth Manager at Virgin Money Manchester, and we are delighted to be sponsors of today's event. Just to let you know, our brand new Brighter Money current account bundle has just launched with 3 brilliant rewards just for joining us. So we're giving a £50 donation to any Virgin Money registered charity of your choice, a case of Virgin wine for you, and 2% on your current account balances up to £1,000. I will share that link with you after today's event, and please do get in touch if you'd like to hear any more. We'd love to hear how you found today's event, so please do tag us in your social media posts. That's at Virgin Money on all social platforms. And just a reminder that today's session will be recorded, and please do feel free to use the chat function for any questions that you may have. So making tax digital for VAT is today's discussion topic. So for now, I'll hand over to Gemma from Crowe and look forward to catching up with you at our next event.
Good afternoon, everyone. Thanks for the lovely introduction, Jen. I'll be definitely having a look at that with the Virgin Wines box. For those of you who don't know me or haven't met me, I'm one of the VAT managers here at Crowe. I'm delighted to be hosting and talking to you today about making tax digital for VAT. Making tax digital and VAT this year, 2020-2021, has been a year of, I suppose, a bit of turmoil for VAT. There's been a lot happening with COVID, with Brexit. There's been loads and loads of changes in the VAT world, and making tax digital, the second phase of that, is going to be one that is a lot of businesses find quite tricky to deal with. So what we're doing today, I'm here to, I suppose, let you know what changes are about to come into force, and then also let you know how you can get to grips with those changes, how you can make yourselves compliant, and to demystify a few untruths and a few things that are catching people out, and just making sure that you are aware how you can comply easily, and then it's not going to cost you an absolute fortune to make sure that you can comply with your VAT obligations. Like Jen said, please do put any questions that you've got as we're going along in the chat box. If Nicola can watch those, once I'm presenting my screen, I might not be able to see those quite very easily. So if Nicola will give us a shout if anyone puts anything urgent in, and we can deal with that straight away. So thank you. I'm going to now share my screen. So fingers crossed this is going to work. No. Right, so that should be working now. So can someone let me know if you can see my slides?
Yes, I can see
it. Thank you.
Yeah, we can see it.
So like I said, today we're going to be talking about making tax digital and looking at whether you're going to be ready for the end of the soft landing period, or phase 2, as we call it. So as you'll have seen in the invite, I'm going to cover a couple of different things. So what is making tax digital? What are the changes that are going to come into force on the 1st of April? What are digital links? So there's a lot spoken about making sure that you've got digital links between your software packages. So what are they and how do you create them? The next part of it is, how do I make sure that we're compliant? Do we need to change our software? Do we need big expensive updates for our software? Or how can we make it cheap and cheerful? How can we just do the bare minimum to comply? So phase 2. So a little bit of background on making tax digital for VAT. When it was first announced by HMRC, they sort of eased us into it. It was a 2-phase process. The first phase was nice and easy. Just make sure that you can submit your VAT return digitally. So that meant you 9 boxes, box 1 to 9, plus a couple of other bits of information, making sure that you could submit that digitally through a portal or through your software without any manual intervention. The second phase, so this is coming into force from the 1st of April 2021. It's been delayed due to COVID last year, but we've been told by HMRC there's no chance of any other further delays. So if you're not compliant and you've not started looking at it, now's the time to make sure you do that. Phase 2 applies for periods starting on or after the 1st of April. So if you've got calendar quarter VAT return, so your VAT return ends in June, the first return that you'll need to comply with for MTD phase 2 will be June 2021. And if you are July or August, so your June, July or August VAT return will be the first one impacted. There's also additional phases of MTD. So phase 3 will happen from 2022, the 1st of April, and that means all VAT registered businesses will need to comply. So not just those who are compulsory registered, which means those who have got a turnover of 85,000 of VATable income. Everyone who's registered for VAT will need to submit digitally and comply with the MTD rules. And obviously beyond that, MTD is going to be rolled out to other taxes and will likely have more functionality. So there'll be that two-way talking between HMRC and the business. They may be able to see things like individual transactions that you put through your VAT return and other data. So it's important that we just make sure we're compliant as we go along. So what's the aim of MTD? So HMRC have got this idea in their head that there's millions and millions of pounds of VAT that's lost due to errors in VAT accounting. So errors, they mean things like transposition errors. So instead of putting an invoice on for £479, you put an invoice on for £279, and some VAT then goes missing from the VAT system. There's also errors due to accounting errors. So if you put something down in your accounting package and you give it the wrong rate of VAT, so you say that it's a 5% rate of VAT rather than 20, therefore there's some VAT that goes missing from HMRC there. They also know that there's some spreadsheet errors, so businesses that have got complicated VAT returns then often use a spreadsheet to help them work out how much VAT that they owe to HMRC and to do adjustments in. We see that there are a lot of errors in spreadsheets, so there might be broken links or outdated formulas, things that just don't follow through as it should do. HMRC are trying to make sure that that stops with MTD. And finally, obviously, human error. You know, we're all human, we all make mistakes, we all, you know, do daft things on the VAT returns. HMRC are just trying to limit that as far as possible. So the ultimate aim is that your VAT return will be a fully automated process. There'll be limited human intervention and therefore limited errors within the VAT return. And those of us who know VAT and deal with VAT day in, day out, we know that these errors go both ways as well. So although HMRC are saying that there's a loss to the exchequer for these errors, you could quite easily have transposed your invoice from £479 to £779, in which case you'd pay too much VAT over to HMRC. So, you know, it swings and roundabouts here. So again, phase 1, so we are still finding a lot of businesses haven't complied with phase 1 of MTD. So phase 1 came in on the 1st of April 2019, and under that phase you were needed to submit digitally. So what that means is you can no longer go into your gov.uk with your user ID and your password and type in your 9 boxes and submit to HMRC that way. Originally there were different timelines for complex businesses. So if you had VAT groups or overseas traders, you were given a little bit of extra time to comply. We saw a raft of MTD software upgrades and different software manufacturers coming into the sector and making more MTD compliant software. So this meant that it was a bit more easy for people to comply, but obviously there was a cost of that. But what we've seen is that people are going back to basics on it. So rather than upgrading your software and buying more expensive software that can do MTD, we're finding people are just trying to use more straightforward, easy and cheap alternatives. And that's what we as Crowe use as well for a lot of our complicated clients. We'll just use a basic spreadsheet to submit to HMRC rather than using a software package. So phase 1 was supposed to end in 31st of March 2020, but was delayed due to COVID-19. So now phase 2, 1st of April 2021, what is changing from now? So for phase 2 compliance, HMRC require automated digital links between any 2 software programs. So what does that mean? We'll come on to that a bit later on. So essentially it means where you've got more than one software program that you're using to submit your digital numbers to HMRC, they need to talk to each other, or you need to be able to get the data from one into the other without human intervention. And there also needs to be a digital link from when the transaction is first recorded on a digital format. So what that means is there needs to be a link. So when you put your invoice onto your software, so if you use Xero, for example, if you put that invoice onto Xero, you need a digital link between Xero and the next software package that you use to submit, or within that digital journey, as HMRC call it. And all of those things then need to add together to give you the VAT return figures, which then submitted to HMRC. So phase 2, how do you know if you're compliant? The first question that we get asked by the vast majority of our clients is, I don't understand the rules, how do I know if I'm compliant or if I'm opening myself up to risk of challenge? So again, just to recap, you need a digital link from when your transaction, so you've got your invoice, when that invoice is first recorded on a digital format, so whether that's into Sage, whether that's into Xero, whether it's onto a spreadsheet, when it gets onto your digital journey, there needs to be links between every piece of software all the way to where the VAT return is actually submitted to HMRC. So those of you who have got fairly straightforward VAT affairs, so those of you who may just use a single piece of software or a single package, you put all of your invoices on, you put your sales and your purchase invoices, and your software might collate all of those together and prepare the VAT return for you. You may already be MTD phase 2 compliant, and if so, that's great. Alternatively, you might only need a few little tweaks to make sure that you are compliant. So it's how do we make those, and how do you get it so it's straightforward as possible. For those of you who have got a bit more complex VAT affairs, so those who are partly exempt or have, for example, a VAT group or a number of different companies with different software packages feeding into your VAT return, you may not find it as easy to comply. But the message here is, make sure you look at all of your alternatives. It's not always necessary to update or upgrade just your software and have everything on one piece of software. You can continue doing it as you do now, so you can have different pieces of software for your different organisations within the business, and you can amalgamate them using something basic like an Excel spreadsheet. That's still compliant under MTD at the moment, so have a look and just make sure that you're not overpaying, or you're not paying out where it's not necessary. So again, do you need to upgrade your software? No. The rules say that you just need to maintain your VAT records digitally. So HMRC use lingo like functional compatible software. So that is a really techie thing, but that just means that you're keeping your records digitally. That can be as simple as a spreadsheet, or it could be your normal accounting software. Most normal accounting software can do it, so can submit digitally. We find that software purchased from overseas isn't always great, so some of our American clients who have bespoke software, they can't always submit under MTD because it's not a thing where they need it. So just check whether you're able to use your basic software to submit. That's probably the easiest way. Again, it's not always necessary to hold all of your VAT records in one software package. So if you use Xero for some of your records, and then you actually use a different package to do something else, you might have a CRM system that raises invoices. It's not necessary to pull the two together. So having your CRM talking to Xero, you can pull them together separately using a spreadsheet or something like that. As long as you've got that digital link between the two pieces of software, that's all HMRC are concerned about at the moment. And again, just at the end there, that last bullet, it's still really, really common for people to use basic software like an API-enabled spreadsheet to submit. Again, you don't need to be buying the high-end software. You can use something really, really basic, and these can be really cost-effective and straightforward as well. So we're talking a lot about digital links here. So what is it? So essentially, there's some definitions there. So it's a transfer or exchange of data that's moved electronically between software programs. I suppose the easiest way to think of it is if you've got a spreadsheet and you have an equals cell, so you can link two cells together using an equals reference. So if you said make a formula with an equals formula from one cell to the next, those are digitally linked. So if I change the data in cell number 1, it will automatically update in cell number 2 without any manual intervention by me. So again, as provided that the data has been obtained via an automated process, you can email a spreadsheet to an advisor, for example, or you can email a spreadsheet to a different part of the business, and you can use those software packages and download these into a different software package to create a digital link. What HMRC won't accept is copy and pasting data or manually typing in your data. So if you know, for example, you've got some amendments that need making to your VAT return, so you know that your software can't cope with the reverse charge, for example, HMRC won't allow you to then add in £100 worth of VAT into box 1 and into box 4. You need to have that link digitally. You can no longer just manually add those numbers in at the end. So how do you know if you're going to be compliant with phase 2? So the first thing that we're advising clients to do is map your VAT return journey. So a lot of you probably don't stand back and say, right, what is my VAT return journey? You probably just look at it and say, you know, the invoices go into the system, you do some manipulation of it, and then the numbers get spat out in a spreadsheet or sent digitally to HMRC. You probably have never looked in detail at how these things happen. Now, your VAT return journey might be quite straightforward. So you might get hold of your invoice. Someone from accounts may then manually put that into your software package, and then you may press a button and then the software package does all of that in calculation and then sends your data to HMRC and submits that. Or you might have something a bit more complex. So you might have an extra step in that. So you might have your invoice going into your accounting package. Someone somewhere does some adjustments to it. So in a spreadsheet, you might have a fuel scale charge, or you might have a restriction on your VAT for company cars. So someone might actually do some tinkering with the numbers before they're finally submitted to HMRC. Or you might have something horrendously complex like this. So this is a screen grab of a processes map that HMRC have put in their VAT notice on Making Tax Digital. And this is fairly common for those businesses that we see with complex VAT affairs. So you can see on this left-hand side is all of the different ways that purchases and sales, invoices and receipts and that sort of thing get into the accounting system. So there's manual input and there's digital inputs there. But what HMRC are trying to show is these different inputs and how they become part of the digital journey. So what HMRC is saying is the digital journey is everything within that yellow box. So you need to make sure that everything feeding into that there's no manual intervention there. So when we've mapped out our VAT return process, we need to then identify areas of non-compliance. So what do we mean by that? What we mean, where are the digital links broken, or where is there any manual intervention? So in this example, we've got something fairly straightforward. So our invoices are put into the accounting system by someone in the accounts department, so they're manually input. So from that accounting package, the second part of the digital journey is that we will download our information from our accounting package into a spreadsheet. So it might be partly exempt, or we might have some adjustments that we make to our data before it's submitted to HMRC. So then the third step is that after those the adjustments are made in that spreadsheet, I then have got me figures 1 to 9 that I've had it from my accounting software. So the data that I've got from step 1, but then the data that I change, so that the adjustments I make in the spreadsheet, if I would then to manually alter the figures that I got from my accounting package, you can see that that is a manual intervention, and I'm manually altering the data. It's not digitally altered, so therefore I'm non-compliant with the HMRC MTD phase 2 rules. Even if I then submit digitally to HMRC, the link is broken on that step 2 and step 3. So how can we, now we've identified a link that breaks in our digital links, how can we fix that? In most cases, breaks in the digital links can be easily solved and easily fixed. So we can make a slight change to our process that we saw on the previous slide, and we can make that compliant fairly easily. So the first and second step is the same. So our invoice is put in by someone from accounts. We use our accounting package to pull together all of the data and produce us I suppose, a draft VAT return. We then make some manual adjustments in our spreadsheet. So if I've got a company car, I need to restrict 50% of the VAT, the input VAT on that. So I can then, instead of making that manual change to the transactions and manual change to the boxes 1 to 9, like I did in the previous slide, if I then journal that change back into Xero or my accounting package, that is then an adjustment that is a digital link. So I've gone back into my accounting package and I've said I need to disallow £200 worth of VAT because I've got company cars on the books. So by making that journal, the VAT accounting data is correct in Xero now. So I can then go ahead and submit digitally to HMRC because the data there is correct and has been digitally changed rather than manually changed. So what we're saying to people is go through and map your journey out to make sure that you understand how things get on. Then we're saying identify any areas of non-compliance, so find out where there's breaks in your software, breaks in your digital journey, and try and fix those where you can. So HMRC appreciate that it's not always going to be plain sailing, it's not going to be easy for all businesses to comply with the rules. So HMRC have come up with some ideas and for people to make it easier for people to be compliant. So they will give you additional time to create digital links. If you've got a complex VAT accounting package, or you've got a number of different organisations or businesses feeding into your VAT return, HMRC can allow you additional time to do that. They also appreciate that for some businesses, it's just simply not reasonable or achievable that you're going to be able to comply with the rules. So you might have a CRM system and an accounting system that simply don't talk to each other. In that case, HMRC might allow you to leave excuse me, some of those parts out. So they may allow you to ask for additional time or show that it's not reasonable and that you might need to create some non-digital links. So what you need to do is you need to apply to HMRC to get confirmation and to be allowed to do those things. Finally, you can apply for an exemption. So if it's not reasonable or practical for you to use computers, say for religious reasons or age, then you can apply for an exemption from the MTD rules. So HMRC will allow those, but it's obviously in exceptional circumstances. But HMRC do say that businesses are expected to make every effort to be able to comply, and they won't allow cost. They would say cost is not a good enough reason to not comply with the rules. And there's also been talk of penalties at the end of the soft landing period. So the ICAEW produced some information about the penalties that are going to apply if you fail to comply with MTD phase 2 and you're not doing anything about it. So HMRC will show a light touch where they know that you're trying to comply. So if you're making every effort, you know, you're taking advice on it, you're watching the webinars, you know, you're going through the guidance and you are trying to comply, HMRC will look favourably on that. If you just simply think, you know, there's no way we can do this, so we're not going to try, HMRC are more likely to be heavy-handed with that approach. Having said that, they have made some easements, and they do appreciate that VAT is a complex tax, so that they've made some easements, and these have been set out in VAT notice 700/22, which is the MTD VAT notice. So we're going to just run through these easements quite quickly. So the first one is any adjustments to the VAT return, for example, partial exemption adjustments. You can undertake these outside of your software, so you don't need to do partial exemption calculations in your software. You can do any of those type of calculations in a spreadsheet or something like that, and it doesn't form part of your digital journey. So that means it doesn't need to be digitally linked. So you don't have to have, you know, all of that digital download into your spreadsheet, messing around with your data and manipulating the data in there and then journaling them back in. That piece of calculation can be done outside of your normal digital journey in your software. So that's a big easement, and it means that a lot of people will be more able to be compliant. The second easement there is businesses that use different software. So for example, VAT groups, you don't need to have all of your software in one version of Sage, for example. You can each carry on using a different version of Sage, and you can amalgamate all of your VAT group data in a spreadsheet or something more basic. So HMRC have said that you can continue to do that, adding all the figures together and then submitting digitally at the end. But what they don't accept is that cut and paste. So you couldn't cut and paste data into a tab and then use that tab to work out another one. It needs to be an actual physical download of the data. So you need to be able to either input that in by like a CSV file or an XML file, or an actual download into the spreadsheet, and then manipulate it from there. Other adjustments that you might make, so fuel scale charge or the restriction on company cars and other adjustments, again, these can be performed out of your software, in, for example, in a spreadsheet or on a piece of paper if you need to, and then you can journal these back in. You can make one journal for each type of amendment that you make. So HMRC appreciate that you will need to journal things in and out. What they don't want to see is huge big journals for 5 or 6 different transactions where you've made an error. You need to have one journal entry for each different adjustment. So you might have one for fuel scale charge, you might have one for reverse charge, you might have one for your VAT restriction on your company cars. Just make sure you clearly label it, so when we talk about that two-way, the data being two-way and HMRC being able to see your data, at least they'll be able to say, right, well, we know what that journal was because there was a restriction on input tax because of this, rather than you just taking out VAT without them understanding why. Staff expenses. So this is an area where we commonly see that there are breaks in the digital journey. So what you might find is that you get, a bundle of receipts together, and then someone might add all those together and put them on as one transaction. So strictly speaking, that would be a break in your digital link because it's manual intervention. So, but HMRC appreciate that there can be a number of single transactions that make up a single staff expense. So what they've said is these can all be bundled together. So you might want to do that in a spreadsheet, or you might have a package of software that deals with that in the business. You can bundle it all together and then submit it as a single transaction per employee claim. So I can put my claim in, and you might have £100 staff expense claim, and then as long as I show how much VAT is in that, I can just show it as £100 plus £20 of VAT, a gross amount of 120. So I'm just do a single line transaction for that. Another area where it's HMRC foresee that there's going to be issues is transactions with multiple VAT rates. So you might think, well, what does that mean, and how would that apply to me? So this could be something as simple as like a meal deal. So a meal deal has got a different rates of VAT within it. So your meal deal might comprise of a sandwich, which would be 0 rated if you're taking it away, and then crisps and a drink. So the crisps and a drink could be standard rated. Obviously, we ignore the temporary VAT relief on this for the purposes of the example. So how do we then make that distinction in our software package? If we're charging £3 for our meal deal, how do we know how much VAT we should be applying to that? So HMRC have said you can either record it as 2 transactions, so you could say the value on this is there's £1.50 for our sandwich, which is 0 rated, and we can say it's £1.50 for our crisps and our drink, which is standard rated. So we can split it down that way. But HMRC appreciate that if it's those sort of transactions that you're doing, you know, that's going to be a labour intensive process, and it's more likely to drive you to more errors, not less. So what HMRC have said is that they will allow you to make a correction for the VAT amount at the end of the period. So you either put it all on as standard rated and then you make an adjustment at the end to allow for the 0 rated element, or you can put it on all as 0 rated and then add that VAT back in. And again, you can do 1 correction per error or 1 correction per adjustment, and journal that in at the end of the quarter. Another area that we will see people finding it difficulty to comply with the rules is petty cash. So again, what you tend to get is, you know, a receipt or a stump or something to show that you've had a petty cash is being paid out. So HMRC have said that where you use petty cash for small value items, as long as the item itself is less than 50 and that the groups of transactions, the whole lot of the transactions are less than 500, you can group those together. So what we're saying to our clients is if you do have a lot of those transactions, group them by, you know, in bunches of 500 and then report those as a single transaction on your accounting software. The reverse charge for VAT. So if you incur or you buy services from the EU or non-EU, so anywhere that's outside of the UK, these items are normally subject to the VAT reverse charge. That means that there'd be no VAT charged by the supplier, but it means that you need to account for VAT as if you've made the supply and also received the supply. So this is a bit of a funny thing in VAT, and the reason why we have the reverse charge is to make it equal and fair for businesses selling services from the UK as it would be if you bought your services from France or someone in the EU or non-EU, to put them on a level playing field. Otherwise, those businesses that can't recover all of their VAT would simply just go and buy all of their services from outside the UK because they'd be cheaper with no VAT on it. So the reverse charge is meant to even that playing field and make sure that VAT is charged where it's consumed here in the UK rather than where the supplier is based. So if your software isn't sophisticated enough to be able to record both sides of the transaction, so to apply that VAT on the purchase as well as applying the VAT reverse charge as in the output tax side, HMRC appreciate that not all software is able to cope with that, so that they've said you can make separate entries for it, so you could account for it as a supply by you, so you charge yourself the output tax, and then a supply received by you. So in the normal way, you'd account for your input tax and then you'd account for the net amount in your box 7 of your VAT return. So as long as you can put both stages of that transaction through your software, HMRC will say that's not an error, so it's not breaking your digital link. So a few straightforward ways to increase compliance. Is there any ways that you can reduce manual intervention? Can you automate any processes? Is there a better way to do it? Are you spending time inputting data twice? So for example, in my example before, you've got an invoice for £479 with VAT on it. Does someone then put that into 0, and then when you come to do your VAT return, do they then input it again into another system to manipulate the data and then submit to HMRC? Can you automate that process? Is there a way of getting that data from your accounting package into your other piece of software without you having to do anything and changing the data? Because that's the ideal way, you know, the ideal best step to avoid any breaks in your digital links as well, is to get that data across in that way. Next is to take a step back and say, is our VAT return too complicated? Can we simplify it? this is a real opportunity to look at your VAT return. Are there any historical bits in it where you've had a complicated return and actually it's not needed anymore? You know, is there any changes that you can make to take any steps out of the VAT return process to make it more streamlined and to comply with it MTD as well? It gives you a real opportunity to be, you know, to scrutinise what you're doing on a day-to-day basis and monthly to make sure that you are complying. And probably the easiest way to identify where you've got manual intervention is to work back from your VAT return and say, right, how do the numbers get together? What happens? So work backwards from your VAT return, and then you should be able to identify any areas where you or the person doing the VAT return is intervening or is changing the data somehow. So once you've identified those links, those areas of manual intervention, you can create a digital link and then obviously be more compliant. Again, somewhere that we find a lot of people don't realise that they're not complying with MTD is where they are copying and pasting data. So you might have items in two different tabs of a spreadsheet, and you might say, right, I'll copy all of that and bring it into the second tab of a spreadsheet. Where it's copied and pasted, it's not compliant. It's as if it's manual intervention. You need to make sure that there's an equals reference and a cell reference that links back to the original data, and that would be MTD compliant if you link it back that way. So, having said all of that, what do we need to do now? The first thing is check that the MTD rules actually apply. So the rules from the 1st of April 2020 only apply if you're compulsory VAT registered. So that's those of you who've got VATable turnover exceeding £85,000 a year. So if you're teetering on the edge of that, or you're not actually quite sure, just go back and check and have a look at your turnover over the last 12 months and see whether you are pulled into the rules or not. The second thing you need to do is check which VAT period is going to be the first one under the new rules. So it's the first VAT period starting on or after the 1st of April 2021. So if your next return is due in May, it's not the May return that you'll need to submit under MTD phase 2. It's the return that will start in the 1st of June. So June, July and August, it's the August return that you'll need to submit. Again, start reviewing your VAT return processes, check for breaks in your digital links, areas of manual calculation. Where is it that you manually intervening in the process? Anyone that's got multiple systems or software packages, you need to check how do the data get from one to the other. Is there a way that we can put in a digital link there? And then obviously if you are compliant if you are within the rules and you're not compliant, you need to find ways to update the VAT processes to be compliant. And while you're doing that, streamlining your VAT accounting, taking bits out that you don't need anymore. You know, if you still got tabs on your spreadsheet that have got capital goods scheme calculation from 15 years ago, you can archive all of those things. You know, just keep it basic. Just make sure that you're complying with the rules, but with as little information as you actually need. So that's all I was going to cover today. I appreciate that we've cantered through that quite quickly, and I'm sure that there's a lot of people with questions. So I will just stop sharing my screen. And Nicola, have we had any questions?
There's no questions in the chat at the moment. If you do want to ask a question, you're very welcome to put on your microphone and camera and ask them directly, because it's always nice to see your faces. That was so clear though, Gemma, really, really useful.
Thank you. Yeah, it's just, I think it's one of those things where people are probably more scared of it than they need to be. So, you know, just don't be scared, fearful of it. Just, you know, take a step back and say, what is it that we're doing? How can we make it more straightforward? And how can we comply without spending a load of money and, you know, reinventing the wheel and, you know, making loads of different process changes? You can probably tinker with things that you've already got without having to, you know, make it huge amounts of effort. And, you know, we just want people to comply without having to, you know, spend a week doing VAT. Not everyone loves it as much as I do, as you can imagine. Not everyone wants to do that.
Absolutely, and I think you've made that, like I said, really clear with the presentation, and there's so many tips in there, and it's just so handy to know, and we'll send those slides out at the end of the session as well, so everybody's got them. I think everyone's being a little bit shy today. We haven't got no questions at the moment, so we'll wrap up there, but I just want to say a huge thank you. That's been an absolutely brilliant session.
So yeah, thanks for having us, and it's hope you found it really useful. If you've got any questions, my email address is on the end of the slide pack as well, so please do get in touch.
Fabulous. Thank you very much.
Thanks everyone.